We are taking a look at technical trends from the past few months and where there may be opportunities ahead. Joining us now is Mark Newton, Managing Director and Global Head of Technical Strategy at Fundstrat Global Advisors. Good to talk to you today. Give me your takeaway here from the first quarter.
Well, look, we've seen now 5 straight months of gains. It certainly has been a stellar quarter, honestly, with the S&P up almost 10% or so. This is really the 12th strongest quarter that we've seen going back almost 75 years. And so very impressive quarter. We started off with 4 straight months of gains over the winter, and now we have a 5th straight. Very resilient. I would say 3 things are really important for investors. One is that, it hasn't just been a tech-led, AI-dominated rally. As we all know, tech has really underperformed the last month, and we've seen this broaden out to other areas outside of even just financials, industrials, and discretionary. Now we're seeing energy and materials start to outperform. So it has gotten a lot more broad-based, and I think that's a big positive. The second, and to your point about Apple, it certainly has not been a stock market that's seen indiscriminate buying. There have been notable laggards, that being Apple and also stocks like Tesla. So I don't sense that we're yet at that stage that we're seeing wild speculation and or complacency. The third is that, arguably the stock market is not really all that overvalued either. I mean, a forward PE for the NASDAQ is right around 21, not as high as we saw really in the pre-COVID years, 2019, 2020, and it's certainly well below the time we saw in the early 2000s when the PEs were up nearly above 70. So if anything, look, the stocks that have dominated the indices are the ones that a lot of investors involved in. They have given us a lot of great gains. And they're also the ones that are making all the money. So that's certainly a good thing.
And Mark, it's great to have you on the show. I also want to get your take, Mark, on another name so important to the market. And when we talk a lot about Nvidia, what a move for that name, Mark. I'm just interested, when you look at the charts, the technicals, what are they telling you about Nvidia?
Well, we've seen a little bit of a slowdown in Nvidia just in the last couple of weeks. I don't argue, I don't think that's really all that significant technically. We've had, even at current levels, which is at 903, the stock is up 400 points, which is over 80% from where it started literally just 3 months ago. So, it's been a rocket ship. It's been parabolic. It's given us, nearly 35% of the gains of the NASDAQ and about 25% of the S&P. Also represents a decent earnings chunk for the S&P and the NASDAQ as well. I view this as just being a temporary period of consolidation. I still think tech is going to push higher. We're likely on the heels of this PCE report that's upcoming. We heard that inflation is now continuing to drop. Expectations are being lowered. Powell came in very, very dovish. Finally, the Fed is in line with the dot plot, so rates should start to fall over. That's only going to aid large cap growth and technology. I see Nvidia getting back to this past Monday's highs. That's right near 968. And above that, which is what I expect, should get the stock up to near 1050 to 1100, likely by the middle part of April. So I'm still quite constructive.
What about the other semiconductor players, Mark? I mean, to what extent have they been correlated to NVIDIA's rise? You could argue in some cases they've actually pulled back as a result of NVIDIA's dominance. What are you seeing there?
The entire semiconductor sector, if you look at semi and semi-cap, is the #1 performing level 2 industry group of the S&P of 25 groups. It's up about 36% for the quarter. That is double the next best performer. So, it does pay to be selective, but as a whole, the sector has a lot of stocks that are continuing to act very, very well.
Mark, I'm sorry, go ahead. Go ahead, Mark.
No, I was just going to say, I'm fond of a lot of these stocks. Until we see some evidence of really technical trends breaking, it doesn't pay to fight this trend. It doesn't pay to say, well, they're overbought, and therefore that means they should fall. If anything, we know the supply constraints on many of these companies have led these stocks higher. That doesn't appear to be ending anytime soon. It's really a story where there's ongoing demand and they have supply constraints. So that's certainly a very, very bullish theme.
And Mark, a final name I need your take on is Tesla. We got deliveries on deck next week. Sentiment is rough. A stock has been hit. What are you seeing?
Well, my own cycle analysis suggests that Tesla should be in the process of bottoming out. So I do have some optimistic words for investors. I mean, the technical trends have been quite negative, but I think it's worth trying to pick spots in this stock, doing it at least in a very small size. And once it can get up above almost 183, which we're close, that would turn the near-term trend a lot more positive. That should drive it up to 220 and likely 245. So I think we're very, very close. As you mentioned, sentiment is awful. There's a lot of reasons for people to, all of a sudden it's unusual to hear people throwing in the towel after the stock's been down over the last couple of years. We all admire the brilliance of Elon Musk. I think that it's just a matter of time. The stock obviously looks to be very, very close to a time when it should start to work.
Mark, great to have you on the show today, my friend. Thanks for joining us.
Thanks, Josh. Take care, everybody. Thank you.